Time now to focus on the performance of a specific fund, and this week we're reviewing the Betta Beta Green ETF by Nedbank. Cobie.
Yeah, I mean, Betta Beta is a franchise, obviously, within the Nedbank Capital business, and this is just another ETF that's come to the market. If you look at your screen over there, you'll see that the Betta Beta Green Fund, we're looking at data up to the end of October 2011, but as you can see, there's a formation date there is only at 1 December 2011. So most of the data we're going to be looking at is actually data on a back-tested basis. Manager there, Beta Solutions, which I've already mentioned. Benchmark there is the Nedbank Green Index. That's some of the data we're going to be looking at. And then the theoretical total expense ratio there is at 0.75%. Remember that the 0.75% is a back-tested number again, and you'll be able to see a far more clearer idea of this total expense ratio, which won't be very different to what you're seeing over here, obviously, as the fund kind of is live and continues to build up a history. The sector allocation, what you're seeing over there is the inner circle, which is all the data points that you see in the middle of the screen over there, is the FTSE JSE All Share and how those kind of priced in industrials, resources and financials. And if you look at the outer rim of that sector allocation, you'll see how the Nedbank Green Index Fund is actually constituted. Industrials at 49%, resources at 31%, and then financials at 20%. So slightly different to what the JSE All Share and how that looks. And obviously, they don't have numbers up to the end of November, but they reconstitute this on a monthly basis. Just to kind of give you an idea of some of the companies that are within the Green Index, and this is now the top 10 holdings. You'll see that Goldfields is right at the top there at 4.8%. Maybe just before I go through some of the numbers, how is this benchmark calculated? It's the top 100 largest companies in South Africa or on the JSE. It's weighted based on environmental and liquidity factors, and then both the clean development mechanism and both the carbon disclosure project numbers are taken into consideration. One being obviously defined by the Kyoto Protocol, and the other one being a UK-based policy decision group. Looking at the weightings there, Woolworths at 4.7%. By the way, if you look across the screen, you'll see its weighting in the social responsible index, which also obviously has to do with a lot of other things such as balance sheets and accounting. The Aussie, its weighting in that, and then the shareholder weighted index, which is a brother index or a sister index to the All Share Index. Barloworld there at 4.7. You can see some of the other weightings down there. I mean, interesting to see that Sasol is included in this index at 4%.
Absolutely. If I could just interject there, because Sasol and Eskom have the biggest carbon footprint in South Africa, so it's interesting to see that Sasol is involved in this.
I mean, I think the important thing here, Lenny, is to understand that the actual index is a starting point for starting to have a debate around having a green fund together.
But as you mentioned, it's based on CDP and CDM mechanisms that have been put in place.
Quite correct. And if you think about those mechanisms, it's firstly, and it also is the top 100 largest companies that are listed on the JSE in South Africa that are taken into consideration for these. So the fact is, how many other oil companies do we have in South Africa that are on the top 100? Well, none, I think. You know, that's kind of the you're kind of stuck with Sasol as far as that's concerned.
But then it just, of course, brings into question, and you see the likes of Goldfields. It's a mining company. We know that it has devastating impacts on the environment, but it is embarking on trying to do as much as possible from an environmental protection perspective, and obviously you mentioned the social impact as well. Look at the likes of Mondi. We also know paper industry. It's not exactly the cleanest industry in itself. Nedbank, a bank, which obviously has a lot of clients that do not protect the environment like they should. So we look at this index and we say, is it really embodying what it should be embodying?
Also, just remember something as well, that to be part of a carbon disclosure project, you know, large corporates are generally part of the carbon disclosure project. It's not smaller businesses. Predominantly of the cost associated with actually going to calculate what your carbon footprint looks like, communicating that, and then for them to be able to utilize the data on your behalf.
Exactly. Now, so all you're doing is disclosing your carbon footprint, but you are not really acting on it.
And you might actually have to also, on the back end of that, you also have to put in a plan in place in order to actually show what you're going to be doing in order to reduce this. And then, quite frankly, you could make it potentially onto the green index.
I think what this index tries to do, and that's the sort of the good news, is it draws a line in the sand. It creates a benchmark for us to measure the performance in terms of the returns of these companies, their share price performance, and maybe their profitability, given their weighting based on environmental criteria. And that's useful. I do think that one has to be careful comparing this index on a performance basis. So when you start saying this index is outperforming or underperforming the All Share Index, or is delivering some kind of return versus risk benefit, we have to be careful, because now we're not looking at financial risk. We're not looking at standard deviation, volatility kind of risk measures anymore. Now we're looking at the returns we're getting from this fund relative to the environmental risks that we are, in other words, there's an additional kind of risk that has to be associated with this fund. And just because it's out or underperformed on a return basis from an investor's perspective might be useful, but that's not really what we should be looking at when we're trying to invest in. This is a long-term support and a flag-waving exercise that I am investing in a fund that is more friendly towards companies that are environmentally responsible.
Responsible in a sense, but I'm going to play devil's advocate again, and I look at Impala Platinum. It's a platinum company, of course, platinum miner, and the water that is needed and the refrigeration that is needed to extract the platinum out of the ground is not environmentally friendly in any means, because it uses a lot of electricity, for example. Again, I look at Sasol, and it uses coal and gas.
Okay,
So,
but
I mean,
think about it like this. Let's assume these companies keep to their plans in order to reduce their carbon emissions for the next 5 or 10 years. Correct. So they're improving. Okay. Do you believe that in 5 years' time, the green index would be much greener, so to speak, than it is today?
Yes.
We hope so.
Absolutely. So it
And they
starts
should be
becoming
rewarded for doing that.
Correct. And it becomes a benchmark as far as it's concerned. So maybe we look at some of these corporations and we say, well, how did they make it onto the index? Well, firstly, they are on the index because of the criteria listings that are actually provided in the beginning. And if they carry on doing what they're doing, they're going to become so much greener. And then this index will, so to speak, actually grow into themselves. I actually want to do what Roland said I mustn't do just now, and quickly do that. I want to show you what the performance looks like for this.
Yes,
so if you have a look at your screen quickly, have a look at your screen and just have a look there at some returns for the green index. And it's back tested here to June 2008. And you can see there's the green index. It's rebased to 1,000. You see its return over there, 10.3 relative to the ALSI at 1.9. And the social responsible index at minus 1.4. I mean, it's period specific here again. You know, we're kind of looking at kind of that subprime crisis and then kind of what's happened beyond that. And we kind of don't take it into consideration that the green index will always outperform. It's just a comparison just to show you that green can provide actually returns, you know, over time.
Would you buy into this?
Well, you know, the interesting thing is if you look at Regulation 28 again, you look at pension funds legislation, it's starting to make room for becoming more green. So this is kind of starting to become on the cutting edge of what you have to do.
Roland, would you buy into this ETF?
If I didn't care just about profit and return on investment, then I shouldn't buy this index.
If
but
you didn't care, so that means you...
If I did care about the environment, then I would want to buy an index that can at least measure whether, you know, reducing your carbon footprint generates a positive return.
So do you care about the environment, Roland?
I do. So I should have an allocation to it. I don't know how much. But I definitely should have an allocation.
You should be an economist, eh? I mean, on the one hand and on the other hand, eh?
My producer tells me in my ear that you drive an SUV.
Yes, I do.